Good morning. Welcome to the Kai Win Morning Show. I am Kai Win, here to give you everything I'm looking at this week. Today is Monday, December 22nd, and it is currently 6 a.m., 6:28 a.m. Eastern Standard Time. As you can see here on the bottom of the screen, 6:29 currently. And so we're going to be looking at what we're going to be trading this particular week. So this week is going to span from December 22nd, and then we have market on December 23rd, which is tomorrow. Market is going to be closed at 1 p.m. on Christmas Eve. So when there's a holiday, it closes the. Actually, is it the day before or is it the day after? Hold on. Let me actually look this up really quick. Okay, so the market is open today from 9:30 a.m. to um, 4 p.m. And then the market is going to be open 9:30 to 4 regular on the 23rd. On the 24th, again, yes, that's going to close early, so that's on Wednesday. And then it's going to be completely closed on Christmas. And then on the 26th, which is Friday, and then on Friday, it's going to be typical 9:30 to 4 p.m. So the only day that's different this week is going to be the actual Christmas Eve, which is going to close at 1 p.m. And I typically like when the market closes early. I'm not going to lie. I really actually do enjoy when the market closes early the day before a holiday, like for Thanksgiving. It closes an hour early the day before Thanksgiving, and I actually really enjoy it because it basically brings power hour up very, very early. Okay, if you don't know what power hour is, it is the most volatile second to market open. So power hour is market close, which is 3 to 4 p.m. Eastern Standard Time, the last hour of the trading day. So I actually really like it because it's volatile. As options traders make money based off volatility, so it's all good on my end to be trading volatility. However, I don't have to wait till 3 or 4 o'clock to get that. I can get it at 12 noon, and I really enjoy that sometimes of the year. So that's what's going to be happening this week. So again, Monday, Tuesday, Friday, 9:30 a.m. to 4 p.m. regular times. Christmas Eve closes early at 1 p.m. and Christmas it is completely closed. I'm not gonna lie, I love Christmas Eve trading as well. Again, because the volatility is great, the day is short, it's just perfect. So let's go ahead and get into the trades I'll be taking this week. I'm gonna go ahead and clear my charts by clicking on this little trash here in the lower corner. And what that little trash icon is gonna show me is what drawings I have. Let me actually just bring this up a little bit. All right, so it says remove 6 drawings, and I'm not going to remove my indicators. I'm only going to remove the drawings. The 4 indicators that I have currently are my ATR. It's on 14 currently. That shows how much dollars the market is moving for this specific time frame. So every 4 hours, currently we're moving $4. Sounds great. Then if you move down to, let's say, the 1 hour, it's going to change, right? Now it's saying $1.60 movement, right? I'm going to go back to the 4 hour. The other one that I have is my buy sell volume bars at the bottom that literally show where volatility is spiking, which is something that I really like. You can see literally with red and green colors when volume is spiking, which normally coincides with volatility increasing, but sometimes it's actually the market hedging against you, and they will be inversed. If you see low volatility, high volume, or vice versa, because that can happen, then that means that you're about to get flipped in the market, and that's a whole different story for another day. Now, let's go ahead and get into my other indicator, which is Moving back up here is EMA 12. It's currently on 12 right now. It's this black line that pops up on the chart showing the moving average exponential for the past 12 candles, and I sometimes also have it on 100, which is a little bit less invasive because it spans over a larger range, so it makes the line a lot more relaxed, as you can see. I have a video on my YouTube channel on how to like read or use EMA, and all these indicators are coming from here. It says indicators, metrics, and strategies here at the top of the page with the little bar chart and a little line thing. And so here are all of my favorites that I've saved. All right, you can see. And my buy sell bars by Rakai are there. If you guys want a separate video on my indicators, that'd be great. I'll do that for y'all. So I'm gonna turn that off for right now. And then my SMA, which is moving average simple, is currently on 9, and I'm gonna close that as well. And I'm just closing it, turning on and off by clicking the eyeball. That way you don't have to delete it and put it back and delete it and put it back. You can just hide it for a second if you don't want to be looking at it. So let's go ahead and chart the day. You guys know that I have recently put all my pride to the side, and I've decided that I'm going to continue to trade gaps. Why don't I want to trade gaps in the first place? Because I feel like I wanted to do something a lot more complicated than just gaps, because let's just be honest, like if you trade gaps, people talk about you. They're like, oh, that person doesn't know how to trade. And it's like, but I do. But why would I trade something that is more difficult just for the sake of trading something that's more difficult? That doesn't really sit well with me. So as for right now, I'm trading gap fills. Now, let me tell you what a gap fill is. It is the difference between an open price and a closed price. So an open price is where a price leaves off, and then you'll just see it go up or go down with no candles in between. So for example, if we look here, there is absolutely no candles right here at all. The reason why there's no candles is because, and for some reason my cursor follows sometimes it doesn't. So I'm gonna draw it for you guys. That came to my attention in a YouTube video, like, hey, your cursor is not working. I actually have not been able to figure it out, because sometimes it works, sometimes it doesn't. So yeah, but this is where price ended off, and then there was literally no candles, and then we see a complete move to the upside, and this is going from $617.90. We're looking at this black box in the corner that's popping up. So look at that, right click, it's just, let's just say $618.40, and it gapped up to $623. So that's a beautiful gap, and we can expect that at some point in the week, resistance will be hit, and it's going to come back and quote unquote fill this gap. Now, when it fills this gap, it's essentially the market saying, we want to come back to this area because we gapped in price. It's very, very simple. So I'm gonna go ahead and grab a tool. This tool is the horizontal, no it's not. This tool is the rectangle tool. Thank you guys for tuning in and clicking on that like button. I appreciate y'all for being in here. So I'm going to click on rectangle, and if you have any questions, you can make sure to ask them, and I'll answer them for you live. So what you're going to do is literally press and hold, and it's going to draw the box when you release it, and you press again. Okay. And right now my box is colored purple, but we'll leave it like that. So we can actually see that price really loves this exact fill zone. And this is why I like trading gaps specifically, because I learned first that they kind of trade and then they kind of invalidate after price goes through and wants to come back to this level. And essentially when price got to here, I'm going to draw a line for you. When price got to here where this yellow line is, when price got back here, came back down and came to this point, right, when price gets back to this point, then it should have not wanted to care about this area again. But as we can see, it actually became a range for us. It became an area where price wanted to stay inside and create a whole box to stay inside for since November, early November to mid. So it was about 2 weeks of just wanting to stay right here. And I actually was trading this when it was here, and while it was creating this, and I just thought it was going to push through again. It took a few days and then it pushed through again. But the point that I'm making here is that a gap can do more than you think, and it can invalidate itself more than one time. Often we'll see that price just wants to come back to them. So that's why I care about gaps. And we're going to go look and hunt for some gaps right now. Okay, we're going to go gap hunting. So we're going to start on the higher time frame because we want a zoomed out look. So I use the 1 hour and the 4 hour. The only other thing that I will do is go down here to this little it's like a gear basically. I go down here to this little gear, and then when I click on this gear, it's going to show me session, and I will turn my extended trading hours off. ETH, or extended trading hours, is essentially when you are going to add your pre-market and post-market bars. So these gray bars are going to literally disappear when I click regular trading hours, because it's not going to show me what happens overnight. It's only going to show me every single day, 9:30 a.m. to 4 p.m. of the active market, what happened, right? And it even takes away the current market because we're currently in pre-market, so it just shows a line for pre-market, but it's not going to show anything, any other candles until 9:30 starts again. So what happens is it makes it a tiny bit easier to look at gaps because some of the candles are gone, but let's look at what's happening. So we actually rejected off this gap on Friday, and Friday was a quad witching day. If you didn't watch that video, I made 50% on that day, and it was a really great move. I'm going to go ahead and grab this horizontal, and I'm going to draw that gap out. And what that gap is going to tell me is it's going to say, hey, when we get back down to this point, you need to make sure that if price is coming back in this area, that you're free to take the fill of this gap back to the downside. So that's one that I see, and normally we're looking between Monday and Friday, because over 3-day span of Friday afternoon, Sunday, Monday morning, I literally skipped Saturday, from Friday night, Saturday full day, Sunday full day, Monday all the way to 9:30 a.m. That's a lot of time for price to move and gap up. So what often happens is you're going to find gaps in between Monday and Friday. So we just found one from Friday, but there wasn't a gap actually in our specific pre-market, which is fine. So I'm actually going to go look at futures. If you didn't know, you can literally just start typing on your computer, like start typing letters, and then you press enter, and then it'll bring up the chart for you. So you don't have to actually search anything. You just click them straight onto your thing, onto your keyboard. So I will go look at futures and see, because it mirrors for the most part. Data is delayed for me, so it's not showing me everything right now. It's only showing me data up until about 6. Well, you can't really tell, we're on the 4 hour, so it's not as precise. But it's only showing me data to 6:32 basically right now. And I gave that estimate because it's currently 6:42. I have 10 minutes of delayed data, quick maths, right? So I don't really see a gap either. I mean, kind of on Sunday, but definitely not today. So that's cool. No gap today, which means that for the most part, let's be honest, I'm probably not going to trade today because there is no gap. But it doesn't matter what I feel like doing. It matters what the market's giving me. So let's go ahead and perceive some more gaps. Instead of drawing them, I'm going to just do something really quick where I just go through and I draw the lines for you guys. This gap is not big enough for me to care, but I do care about this gap. Ooh, that price is currently in. So you see this yellow dotted line that's representing our pre-market is currently at 619.70 cents. All right. Our yellow line is at 618.9. The reason why I know the difference is because the numbers are black, and with pre, they're matching the word pre because the word pre is white, and so it matches, so you can tell if it's black wording. Oh, if it's black wording, then it's gonna match the line. If it's like the line that you drew, the horizontal line. And Sunday's watch and learn video is already up, where I talked about how to, like, literally all the ways to draw horizontal lines on your charts. And it's just a really in-depth video for beginners. So if you haven't watched that video and you've been wanting to learn how to chart better, definitely watch that video. But what I care about this is because price is back to this level, right? When price came in last week, we were so bullish all week. Last week was the 15th through the 19th. So if we go back and look at the 15th through the 19th, all this was bullish, okay? And so what I'm referring to is, like, all of this is from the 15th to the 19th. This was all from last week, right? Well, mostly from last week, right? It's basically, it's 1.5 candles per day. It gets kind of complicated to explain that when you take off the pre-market bars, but we're gonna roll with it. So let's just say it was mostly bearish for last week, mostly puts, right? Strong puts, or dropped about $15 overall, like for the week. And so what we really care about is that price is no longer down in the dumps where it was. Price is actually up here back in the sky, and is actually back to a previous gap that we had. And guess what? This is all-time high. That's the point that, well, yeah, actually, this is, I accidentally do that, but yeah, this is our all-time high. This is our previous highest high. So this is our high, and then we have technically it broke structure, so I wouldn't call that a lower low. It kind of leveled at the same place. So that's kind of subjective, and I definitely don't want to confuse you in that arena. But let me go ahead and just show you that, like, price has rejected off of this level, which is actually great because this level 600, basically this exact level at 600, has really shown us that we want to reject here. We poked down a tiny bit, but we mostly kept it as a support for this week. And then we also held it here. We also tried to come up, but we held it again here. And then we kind of held it here, not that much. It didn't necessarily create a downside move. It's just been holding as a premium support. So what that tells us is that we can expect price to also hold here, but all-time highs are often broken as well. So it is a lot of things going on. But the one thing that I do like is that we're getting closer to all-time highs finally, because imagine, like, I'm so used to trading all-time highs. The last all-time highs were in October. It's now December. That's almost 2 months ago that we've been down, and then we came back up, but we didn't come all the way back up. I thought we were going to reach all-time highs somewhere here, but we just fell back down. And so we might fall again, but at some point we're going to reach all-time highs again, and I'm definitely excited for that. But what I would do for today specifically is just mark out this gap here and just say, hey, when price gets back to this level, that's what I care about. But there you go. And the way that you draw it is just from the top of the previous to the bottom, just exactly where there are no candles, right? So one thing that we can expect is for price to come up and at least be cool to take something up into 623. So this is 617. Now, of course, price can reject, but this line has never really held as a rejection. More so, this 623 has held it as a rejection. So we're looking to hold. If it holds, we're looking to take up into 623.9, and then be on the beware for a reversal, or for it to start building up again to make another higher low and then break all-time highs. So the higher low that I'm referring to is this low here, and then we made a higher low here. we can try to make a higher low here that will set us up to completely obliterate this. And this is all on the 4 hour. So if we actually go down, right, and that's not going to happen today probably, but we can expect that kind of for the week or for at least for the end of the year. It's just really important that you really go in depth of pre-market and you look at everything that may or may not affect your trading. So I'm also going to look down on the 1 hour, and then I'll put my pre-market and post-market bars back up. But yeah, this was a complete like cup. So I made a video about this already, but essentially this is a cup candle trend. So price comes around, it creates a nice little channel, and then it continues down. In this case, it rejected back up and may or may not fill this gap. It may or may not hit this level where we previously wanted to stay below, literally for the past 2 months, because we have not wanted to go back up into territory with the higher highs to meet our all-time highs and make higher highs. We just wanted to make higher lows right now, which is okay, and it might come back down, but at the end of the day, it really doesn't technically matter what happens. What matters most is that we're not just jumping into stuff because we think we should. We're actually like mapping out what we think we could do, mapping out what we think is some things we might want to be looking at, and then just keep those things in mind. It's not like, oh, as soon as it gets to this level, I'm going to enter. Well, if you look and you see the volatility is very low, and it's like taking 50 years to get up there, well, you're not going to make any money anyways unless you're swinging it, because you're not going to make money off of the volatility. You might make money off the price movement, and that's totally different. That's the difference between swinging and scalping. If you guys want a full video on that, but the difference about swinging and scalping is that when you swing, that's when you're making money off the price movement. The price action. You actually don't really need volatility for it. You just need enough time for it to play out. So you can take something that's pretty slow, but as long as it captures $10 or $15 or a big price amount or a big gap in price, and you're far out enough in your expiration to let it capture that without needing to let your time decay eat you alive, you're Gucci, right? But then if you're swinging, if you're scalping, that's totally a different situation. You only make money based off that volatility, and so you want to make sure that you are not, number one, holding trades you're not supposed to. And number two, you do not want to be turning any swing into a scalp, because you need to make sure that you are not taking a trade that needs volatility and turning it into something that's going to use price action, because those are two different entry points. All right, but again, I'll make a totally different video about that. If y'all care, make sure to comment down below if you care to know that. So I basically am going to be looking for a rejection here at 623 or even up to 627, just everything under here, because we also, if you guys can see, have another gap here. All right. Right? So from here to here, I gotta figure out this cursor thing, y'all. But from here to here, I did figure it out on my iPad though, so that's pretty cool. But I'm not filming on my iPad today. But from here to here, right, let's zoom in a little bit. Let's zoom in a little bit and bring our attention to the circle we just did, right? Where we just drew this other, Here's where we have another gap. This is from 627 to 632. So that is $5 of some nice movement to the upside. And then we're basically free game for all-time highs, which is totally delicious. But we also have to make sure that price doesn't reverse where it's previously reversed. So I'm going to add a resistance line here, because if price wants to come in and tap this gap, but it doesn't follow through, well, I don't really care, because this gap is only $5 anyways. So it's already kind of invalidated half of it. So there's only like $2.50 left in there to actually take advantage of, if you were to take advantage of that. But that's only and only if price wants to come up past this 629.6. So specifically what we're looking at is we're looking for a cross above the 619 to just fill out this gap to 624. Then if price decides to get past all of this choppiness and also range and push towards 629.4, we might want to take to the rest of this gap. But if you don't want to take that, I don't even blame you. And then we're looking for free game into all-time highs, and that would be really great as the year ends to be capturing all-time highs in that specific way. Yeah, so I'm Kai Nguyen. You can meet me here every Monday, Tuesday, Thursday at, I did it kind of early today, normally 7 a.m., but I was feeling juicy and spicy, so I decided to come in and drop some game like kind of early. 7 a.m. on Monday, Tuesday, Thursday for the Kai Nguyen Morning Show, giving all of my pre-day prep, showing you exactly what levels I'm entering at. It's just what I did. And then at 10 to 11, that's when I actually live trade with y'all, Monday, Tuesday, Thursday. So this is the place where you can literally get to see my strategy. I give away everything and ask me questions directly. This recording can actually be found on my channel, but I do them live, but you can find them on my channel once they're posted. So they're posted in a playlist on my channel called Live. So where all my live videos are in my channel. And you can actually bring your questions. But I'm going to see y'all later for the actual market, and go make your money, because I'm going to go make mine. Kai Nguyen is out. And remember, showing up every single day is what makes you a winner. And I'll see you guys later for my real trading.